Hello there, crypto enthusiasts and market observers. In today's video, we will debunk the buzz surrounding Bitcoin plummeting to $20,000. Hey there, crypto enthusiasts. The big question on everyone's mind today. Are we about to witness Bitcoin's descent below the $20,000 mark? Now, we recently got our hands on some intriguing information, and we can't wait to share it with you because it strongly suggests that we might be headed south of that critical threshold. So in this video, we're going to dive deep into the topic. We'll provide you with insights, discuss the current market dynamics, and offer guidance for all you altcoin holders out there. Yes, you definitely want to stick around for that. But there's more. Are the big players, like BlackRock, playing a role in manipulating the crypto market as we speak? We've got some compelling evidence to explore. So, this video is jam-packed with valuable insights, and you won't want to miss a minute of it. From start to finish, we've got you covered. Welcome back to Key to Crypto, or KTC for short, where we bring you the latest cryptocurrency updates and guide you on navigating this exciting but often unpredictable market. If you're new here, make sure to hit that subscribe button and ring that notification bell so you won't miss out on any of our valuable content. Let's get this crypto journey started. All right. Crypto enthusiasts, let's dive into the charts and decode the latest moves. On the 4-hour time frame, it's clear that Bitcoin retraced the entire green candle that had us hopeful not too long ago. We even touched the resistance level, but since then, it's been back to the same old story, sideways and uneventful. In fact, the current volatility is the lowest Bitcoin has ever seen in its history. So, is this just the calm before a storm? Or are we stuck in this dance of sideways action indefinitely? Not a lot of answers right now, but the strategy remains the same for many. Buy the dip. Now, switching gears to the traditional markets, there's this intriguing gap that's been catching our attention. It suggests the potential for a drop before we see another attempt to break through the upper edge of this orange box. We did test it once, but we failed, so it's a watch this space situation. But what about those holding altcoins? Here's the market cap for altcoins, excluding Bitcoin and Ethereum. We're treading on thin ice here with a trend of lower highs. We're nearing a crucial support level. If it breaks down, brace yourselves for a possible 35% drop across the altcoin market. That's a significant move, folks. So maybe consolidating into Bitcoin and Ethereum isn't such a bad idea until we get a clearer market direction. Now, let's look at Bitcoin dominance. It's been on the rise, hitting 52%. We're pausing a bit now, but it's essential to note that we're finding support at a previous resistance level. This suggests that Bitcoin dominance might make another push upwards, which could mean more turbulence for altcoins. Pay close attention to the total crypto market cap excluding Bitcoin and Ethereum, and the Bitcoin dominance chart. They're giving us some strong hints about what's next for the altcoins. All this uncertainty stems from the macroeconomic landscape, including the ongoing legal battles involving certain altcoins. Take Ripple, for example. They won their case against the SEC, but the SEC isn't backing down. They're appealing, and the outcome could have far-reaching effects. So, caution is the name of the game when it comes to altcoins. Meanwhile, many are finding safety in the stability of Bitcoin and Ethereum, given the times we're in. Before we continue, just a quick reminder, don't forget to hit that like button, subscribe for a regular dose of enlightening content, and ensure those notifications are turned on, so you're always in the loop about our latest videos. Alright folks, let's dig into a hot topic, the potential influence of BlackRock on the crypto markets. Why is this a big deal, you ask? Well, it's all about securing a more significant piece of the pie in the upcoming bull run. BlackRock isn't content with just the ETF. They're well aware that the ETF will drive Bitcoin prices to new heights. So, what's their game plan? Not just mining companies, as we've discussed before, but now there's a new twist. Recently, there's been news of BlackRock making moves to acquire Voyager Digital. Now, Voyager used to be a lending platform and had seen its fair share of ups and downs, including bankruptcy. What's BlackRock's endgame here? Well, it might not directly link to the ETF. After all, Coinbase is set to be the custodian for that. Instead, this could be a step towards something bigger. Perhaps they're eyeing their exchange or retail custodian solutions. We can't be entirely sure about the accuracy of this information, but the idea is tantalizing. Why would they want to keep Bitcoin prices lower, you wonder? It all comes down to increasing their stake in the crypto space. The lower the entry point, the more significant their foothold when the next bull run takes off. And trust us, it's coming sooner than you think. Currently, the sentiment in the crypto market is at a low point. Just look at Twitter. Back in July, people were exuberantly bullish, and oddly enough, Bitcoin took a dip when that happened. But now, it's a different story. We're witnessing a bearish sentiment that's been absent for most of the year, and here's a key indicator. The bearish sentiment often paves the way for an upward Bitcoin trend. Remember the short-term and long-term holders? It's telling an interesting tale. Long-term holders are on the rise, while short-term holders are dwindling. This suggests that people are getting a bit more cautious and possibly selling. Of course, there's another side to the story, the bearish case for Bitcoin and the broader markets. All right, fellow crypto enthusiasts, today we're diving into the compelling case for Bitcoin potentially dipping below the $20,000 mark. It's not a theory to be taken lightly, so let's break it down step by step. First, let's look at the upcoming interest rate scenario. There might be a pause in rate hikes this September, but the real intrigue comes when we peer into the CME Fed Funds futures for November and December. Check this out. For September, 92% believe we won't see a rate increase. However, as we look ahead to November, there's a growing consensus that the Fed rate could inch up to 5.75. Even in December, 42% anticipate the rate staying at 5.75. This suggests that a 0.25 basis point rate hike is on the horizon. But that's not all. The price of oil is climbing, and this usually leads to higher inflation. So here's the scenario. We could see interest rates on the rise, and any notion of a rate cut before 2024 seems to be off the table. Additionally, it's projected that U.S. Treasury yields could surge to 4.5%. Yes, you heard it right. The 10-year yield, which currently hovers around 4.3%, could potentially go even higher. This could translate to locking up your money for 10 years and enjoying a hefty 4.3% yield. It's pretty wild stuff. Now, here's the bearish case for Bitcoin. While we're making a strong case for the potential breaking point of banks due to soaring interest rates, the counter-argument is that they can't keep interest rates this low for much longer. The banks are already feeling the strain, resorting to heavy borrowing from the Fed to keep themselves afloat. The question here is, can they continue hammering down inflation while simultaneously risking the stability of the banks? It's a precarious balance. In the likely event of the banks teetering on the edge, the Fed might have to step in, cue potential bailouts, money printing, and lower interest rates. And this could be the turning point for crypto prices, as they start to surge upward once more. So, when someone says, "I see Bitcoin going well below $20,000, it's all part of this intricate chess game. We'd love to hear your take on it. What do you think will unfold in this evolving crypto landscape? Drop your thoughts in the comment section below, and let's continue the discussion. 2022 was a year we'll all remember in the crypto world. The infamous crypto winter. It brought a frosty chill with the sudden collapse of the FTX exchange back in November 2022, sending shivers down the spines of many investors. But that wasn't all. The crypto crackdown wave surged through the US as regulators, led by SEC Chair Gary Gensler, took the reins. Gensler's stance has been clear. He and his agency consider most cryptocurrencies as securities, subjecting them to a web of legal regulations that had long existed. This assertion gained further strength as the SEC filed lawsuits against some major crypto players, including heavyweights like Binance and Coinbase. The allegations? Engaging in the unlicensed sale and transfer of securities. It was a turning point in the crypto landscape. But wait, there's a twist in the tale. Gensler and the SEC aren't painting all cryptos with the same brush. Bitcoin, the OG of the crypto world, gets a different label. They see it as a commodity, not a security, which places it under the jurisdiction of the CFTC, not the SEC. We'll be keeping a close eye on how this story unfolds, and you should too. That's it for now. If you enjoyed today's content, show your support with a like, leave a comment, and hit that subscribe button. Feel free to share your questions, thoughts, and suggestions in the comments section. Together, let's build a community where curiosity and wisdom are freely exchanged and nurtured. Until next time, and remember, the future of finance is here with KTC.